Doc. Sean Duncan with SMD Consulting and Accounting. Man, I want to thank you all first for all of the great comments, feedback, and direct messages. Today's topic is actually as a response to a direct message. Dr. Carolyn, you said, Sean, I loved the information. I'm paraphrasing. Can you just summarize that entity stuff in one video just real quick so I can make sure I can get a compare and contrast? Sure, let's do it. First, disclaimers. Alrighty, so Dr. C, here's what we're going to do. We're going to just touch on those 4 entity types, and then we'll go into compare and contrast. Now, I have not neglected the LLC. We're going to talk about that thing too. But first, let's talk about those 4 entity types: the sole proprietorship, the S Corp, the partnership, and the C Corp. Those are the 4 core federal entity types, and they have a whole bunch of rules around them. At the simplest, the sole proprietorship is the easiest to get started. If you want to think about this, as you move yourself through a spectrum, sole prop, partnership, S Corp, C Corp, and you move your way down that line, as you move that direction, you get greater and greater degrees of liability protection. With that liability protection, you exchange for some more rules and compliance and cost. To get this greater liability protection, you got to follow more rules, and the IRS gets off your back and certain things happen, right? So sole props, super easy to start. I just form one, boom, you're there, but you have maximum liability and risk, and honestly, possibly maximum tax, because you're going to pay income tax, employment tax, and state tax on that no matter what. The second entity type is the partnership. And in the partnership, you can be a general partner or a limited partner. Don't worry, I did have a request for splitting up the distinction between general partnerships and limited partnerships. We'll talk about those in another video here in a sec. But the general partners kind of look a lot like sole proprietorships. They have personal liability and they have full self-employment tax, kind of a stinker, but you do get control and decision-making authority. Limited partners, moving our way down the spectrum, have a greater liability protection, but in exchange for that, you don't pay the employment taxes. Partnerships, kind of cool because they can be fluid. You can be 50-50 owners and split revenue 90-10. You can do a lot of dynamic things with it. So that gives you more choices as we talk about the entity types. And I love partnerships, particularly in medical practices. We just have to manage that darn general partner thing and see how we can do that. S corporations are a little more strict, but in exchange for the strictness, you get very clear rules on liability protection. Your liability is limited to the extent of your investment in the practice, which is just like a limited partner, and your net income is not subject to the employment tax. But in order to get that, you have to pay a wage to yourself, which is subject to employment tax. But wouldn't you like to control the employment tax rather than just everything getting popped with it? That's part of the trade-off. But they, again, have a little bit higher asset protection and actually have a lesser audit risk because of all these dang rules. C Corps, best asset protection. Separate entity, completely distinct from you as an individual, but then you face the potential of double taxation. There are times people want the C Corp. They want to get that 21% flat tax rate instead of paying the 37% plus the state plus the individual employment taxes, but the money's trapped in the corporation. There are still personal benefits that can be derived from that corporation. So we want to manage that. We want to know, when does the C Corp fit? Just this past week, I recommended a C Corp to someone, and it was a very, very unique circumstance. So when you're looking at C Corps, you have to first ask yourself, do I actually want this money to come home? And is the trade-off of the extra tax worth the extra liability protection? So when you're looking at this spectrum of these 4 core entity types, you've got to decide what fits you, your goals, and your objectives. So hopefully, Dr. C, that gave you a good high-level summary of how this all works out. Hit me with more details. I'm going to follow up some additional videos here real soon on the partnerships and give some more details since you guys asked about that. Hey, Doc, there's some summary for you. Have a good one.